Hi, my name's Roger Schluter. This video is actually avoiding an IRS audit in next year, 2023, or any year, but it is getting close to that time. So anyway, and it can be used in any year. These are pretty general. The video is about the entries or parts of your tax return that will increase your chances for an audit. And believe me, you don't want an audit. If you stay till the end, I'll have a list of the most worrisome entries on your tax return that can trigger an audit. It'll be towards the end. An IRS tax audit is where the IRS goes over certain parts of your tax return, or goes over the whole tax return in detail. How you have the return prepared will have a great deal of impact on how worried you should be about the resulting findings. If you had the return prepared by a CPA or enrolled agent, then I really wouldn't worry too much about it. These two groups have a great deal of knowledge about how to prepare your taxes and usually do not make a lot of mistakes. They will also have your back if the IRS finds mistakes. They will actually cover you. If you prepared your own tax return or small business tax return, then I would start sweating it out if you get an audit. The tax code is very complicated, and unless your taxes are very simple, there is much room for error. Forgetting or misunderstanding can be a forgivable mistake, but if you intentionally misrepresent your income or expenses, then that could be a case for tax fraud. And usually small amounts the IRS isn't going to try to send you to jail for, but I tell you, I would be careful. Usually if you use a reputable tax software program like TurboTax, then you lessen the chance of a really big mistake or error. I do my own taxes, and that tells you that my taxes are not hugely complicated. I have done my taxes since I was like a teenager, so I think in years where things changes in my life, I usually check, the IRS, check their code and everything to make sure I'm doing it correctly. But most reputable software will actually tell you at the end if your return is at risk or not. Now, I know TurboTax, and I only say TurboTax because I use it. I'm not trying to push them or anything. But, if the end of their turn, the TurboTax actually has a graph, and over here is less risky and over here is more risky, or maybe it's vice versa. But anyway, it will tell you in that thing whether it's not risky or whether it's very risky. And that gives you an idea on how careful you should be. There are many types of income and expenses that will increase your chances of an audit. There are also many types of returns that will get flagged more easily. Now here I'm actually going to tell you about my 7 most important entries or things in a tax return that may trigger an audit by the IRS. Number 1, keep excellent records of your income and expenses. These must include amounts, dates, and any other info that may be applicable. I mean, this is very important. You keep good records. And that is, with anything, with a business, even your personal. Honesty. This is a personal thing, but it could save you a lot of time and aggravation if your return is audited. If you tend to exaggerate either income or expenses, just make sure it is not purely made up. There has to be some basis for your numbers. Number 3, file your taxes on time and check your numbers for accuracy. Check your accuracy on any arithmetic. Do not use round numbers. Exact numbers look more accurate. Pay all estimated taxes on time. And then filing electronically or by mail. I've heard that filing by mail can sometimes put your return in a bracket that's not in the audit pool. Filing electronically will always put you in the audit pool. If you decide to send in your taxes by mail, I would definitely go ahead and get the tax pages or the tax 1040 or whatever you're going to use, and get that from the library or from some other source. Do not use the 1040 that the IRS or whatever that the IRS sends you, because it will be marked as yours. They have a, computer type thing up there at the top that will actually kind of say that it's your return. And so if you use that one, it can very easily for them to put it in the audit pool. But if you don't, I think that there is a less chance of being in that. Not that that's a bad thing, it's just that you really, the whole object of this is not getting an audit. So anyway, if you do mail it in, use the generic forms. Do not use the forms IRS sends you. Number 4, don't report a loss every year, or if you do, I mean, I know if you have a loss, you need to report it, but if you report it on a business, report a business on a Schedule C, the IRS may try to classify your business as a hobby, and you will not get your deductions. So if you do report a loss for multiple years, be prepared to show what changes you're making to rectify that situation. You don't want to make it look like, oh yeah, I'm just losing money so I can deduct them every year. You really want to have a real plan to actually make money with your business. Number 5, expenses. Always have good, accurate receipts. If you don't have an accurate receipt, then write one. Put who it's to, the amount, the date, any other information that you need to put down what it was for. And that can count as a receipt. All a receipt is a detail of really, your purchase. Anyway, home office. Always take the deduction if you're entitled, but do not fudge the amount. If you fudge, do make it believable. I knew a person that actually made their whole house their office deduction, and I guess he got away with it. I know he did for a couple of years. When I was a banker, but I was like, I did not make him alone. He came in one, and I said, I can't do it because you're eventually going to get into trouble because of that. Anyway, paying independent contractors. Make sure they qualify as independent contractors. If not, the IRS could say they're employees, and then you would have to pay other taxes for them and things like that. And then along those same lines, always issue 1099s on time and for all contractors. I do know some banks don't issue the 1099s for their smaller contractors, smaller amounts. They only do it for larger amounts, but I would do it for all amounts, no matter what. Schedule C and E can cause more scrutiny for your tax return. These schedules will be examined more carefully, so try to make your Schedule C and Schedule E correct. Or use a different way to file. You can use several different ways. You can use a partnership. You can use a corporate sub S. A couple other things you can do. Avoid excess dining and travel expenses. Really report only correct numbers. I know a lot of people that dump a lot of money into the dining and expenses, and you're going to really need receipts for that. So. Avoid high salaries to employees who also are shareholders. That's kind of hard, but that's when the company is a little older and you had people that started the company, they took shares, and then after the company starts making money, a lot of times you want to start expending money. You don't want to do it as dividends, so you start, just giving these people high salaries. But be careful how high that salary is. You might even ask your tax preparer what number should you have on there for that. Try to use industry averages for sales and expenses. And I'm not saying you want to change your numbers, but see if you're within the average. And if you're not, just be prepared to explain why you're not in those averages. So there is, certain companies make a certain amount. The IRS, they do so many taxes, they know what type of companies make. They know what a barber makes. They know what a typical accountant makes. They know what a typical car salesman make. So they do know a lot of these things. So try to find out what those are. And if you don't want to lower it, but if you are within those areas, then just go ahead and be prepared to explain why. Pay attention to IRS notices and respond either by yourself or hire a reputable expert to address those issues. Do not put these notices on a back burner for later. You need to address them now. And if you can't do it, do hire somebody who can put your best foot forward. Number 7, be prepared to answer any IRS questions or issues clearly and with detail. You really want to be able to answer those questions. Like I said, don't just slough it off. You want to answer it clearly and with detail so that they understand exactly what the issue is and exactly what you're talking about. In summary, if you address these issues and items of your tax return, you will be less of an audit candidate. You don't want an audit. You don't want to get audited. But at least, by looking at some of these and being prepared, I think, you'll know how to respond to the IRS if you are audited or if you do get a letter from them or asking for some information. If you like this type of business content, I hope you subscribe and hit the notification bell to be notified of my future videos. Also hit the like button if you learned anything in this video. My name is Roger Schlueter, and I will see you in the next video.